So the company I'm going to do some stock analysis on today is Microsoft. Now, Microsoft is a company that was founded in 1975 and it's been over 45 years now, a little over 45 years. So in all those years, a lot has been going on with that company. Also, being a company that has been in existence for 45 years and is still relevant up to this day, that's an achievement in itself. So with this analysis, I will go into a little bit of history on Microsoft, but then we'll jump right into the analysis. So let's just get started. Microsoft was founded by Bill Gates and Paul Allen, two friends who went to school together and had a love for technology. With hard work and dedication, they were able to turn their passion into billions. Microsoft has had two previous CEOs, Bill Gates and Steve Ballmer. Currently, Satya Nadella is the CEO of Microsoft. Interestingly enough, if you check the Bloomberg's list of billionaires, you'll see that Bill Gates is in the top 3 and Steve Ballmer is in the top 10. That just goes to show how much of an impact Microsoft has had on their business life as well as their financial life. Microsoft has many different products and services which allows it to generate over $140 billion in revenue. Some of its key products are Microsoft Windows, Microsoft Office, the Xbox gaming system, cloud computing, Skype, Bing, GitHub, and more. This is, of course, not a full list of what Microsoft has to offer, but it goes to show that this company never stands still and has its hands in various ventures and industries. Depending on who you talk to and how old they are, you might be surprised what they think Microsoft is known for. If you talk to anyone born before the 2000s, they'll probably tell you that Microsoft is known for their Windows and their Microsoft Office products. Talk to a newer generation and they might tell you the Xbox. This shows us how Microsoft has been able to innovate and evolve throughout the years. In the 80s and 90s, one of Microsoft's immediate competitors was Apple. Microsoft and Apple have always had a complicated history, as these two had to work together when Microsoft bought shares in Apple, and also having Microsoft products work on Apple, like Microsoft Office. Nowadays, Microsoft has many more competitors, from gaming consoles such as the PlayStation to the search engine giant Google. Microsoft's competitive advantage is twofold: innovative technology and smart visionaries. Tech is one of the hardest industries to stay relevant in, because today's hottest tech is tomorrow's forgotten relic. Only a competent CEO can look at what the future needs and translate that to smart employees to make it become a reality. Microsoft has consistently done this with tech. There have been hiccups along the way, of course. For example, Bill Gates did not see the big impact smartphones could have on our daily lives compared to Steve Jobs. However, Bill Gates, Steve Ballmer, and Satya Nadella have been able to not only keep Microsoft relevant, they've been able to make Microsoft a household name. So a good thing about Microsoft is that they've been able to increase their revenue year over year by about 11 to 12%, which is actually really great. And these numbers are in the billions. So this year, 2020, $143 billion in revenue. Now, when it comes to the revenue, I also like to add the net income. So let's go ahead and add the net income. I like to compare both of the revenue and then compare it to the net income. If the revenue of a company is growing, more than likely their net income will grow also. And there have been some dips in net income by looking at the chart. But as you can see, the overall trend is an upwards trend. That's why I like to look at the revenue. So the revenue is up for Microsoft, which means that their net profit margin or their profit margin should also stay consistently in the double digits, which also means that their net income is in the upward trend. So let's go ahead and look at their net profit margin, also called their net margin. And as you can tell, when I look at the net margin, I'm looking for consistency, and growth is even better. With this being a tech company, I'm not surprised that the net profit margin is a little bit all over the place, but as long as they are in the double digits, I am perfectly fine with it. Now, the next thing that I look at is the shares outstanding, and if the company is actually buying back its shares. Now, Microsoft, they have been issuing out new shares all the way up to, let's see, about 2000. But ever since the early 2005, they've been buying back their shares, which is great because if a company buys back its shares, that means that my ownership in the company grows if I own stocks in that particular company, and I do own stocks in Microsoft. Now, the next thing that I pay attention to is the amount of debt that a company has. And one of the things that I like to look at is the debt to equity ratio. I like to see the debt to equity ratio be below 1. And overall, Microsoft has been able to keep it below 1 in the last 10 plus years. They went over 1 in 2017, but besides that one particular year, they've been able to keep it below 1. So debt to equity pretty much tells you how much debt does a company have in relation to its shareholders' equity. So one thing that I also like to do is I like to look at the total liabilities that a company has and then divide that by the net income that the company generates. That tells me how fast the company can pay off its total debt based on the net income it generates. And for Microsoft, this number was 10, so 10 years. I like to see it below 6, but there are companies that use debt in order to grow, in order to fund their projects. So that's not a bad thing when it comes to Microsoft because they are able to, like we saw earlier, they are increasing their revenue year over year and they're also increasing their net income. Now, the next thing that I like to look at is the return on equity. I like to see this in the double digits. Above 10% would be perfect. And the return on equity pretty much tells you how much net income a company is able to generate compared to the shareholders' equity. This is also a good way to tell if a company has a competitive advantage. A company with a competitive advantage usually has a high return on equity. And in the case of Microsoft, their return on equity is pretty high. And then also quickly, one thing that I look at is the return on invested capital. Also looking to see if this is in the double digits. It has been on the decline somewhat, but it's still in the double digits, so this is also looking very good. Now, lucky for me, Microsoft is a dividend-paying company. They've been paying an increasing dividend since 2004. And the good thing about this is that they've been able to increase their dividend by looking at the dividend per share history by about 10% every year. And when I look at the 10-year time frame, it's actually 14%. Cool thing by looking at the chart, and this is why I like to invest in companies that are able to grow their revenue, which means that they should be able to grow their net income also. When you look at this chart, because Microsoft has been able to grow their revenue, their net income is also growing, which also then means that they've been able to pay an increasing dividend to their shareholders. There have been some dips in net income generated, but on average, the trend has been an upward trend, which also reflects in the dividend because, as you can tell, the dividend has been increasing by about 10% every single year. Now, looking at the payout ratio for Microsoft, payout ratio pretty much meaning how much net income is the company paying out as a dividend to their shareholders. You can tell that Microsoft has been keeping it at a steady pace below 50%, but there have been some spikes, and these spikes coincide with the dips in the net income that we looked at when we looked at the dividend per share history. But on average, so even though we see these spikes, Microsoft has been doing a great job at keeping the payout ratio below 50%. And I think that's pretty much their goal just by looking at this chart. This is great because when it comes to the payout ratio, I like to see a payout ratio at least below 60 or even 50, but of course it depends on the industry that the company is in. But just to see that Microsoft is working hard to keep their payout ratio below 50, that is something that will allow me to sleep well at night. So one thing that I don't really like about Microsoft when it comes to the dividend itself is that their dividend yield is very low at around 1%. Dividend yield, pretty much you're taking the dividend, dividing it by the price of the stock. It tells you how much dividend you're getting when you're paying for one Microsoft stock, and 1% is fairly low. Usually I like to see this at a minimum of 3% and even higher. There are some companies that have a high dividend yield and a high growth rate. Usually you will notice that with companies that have a low dividend yield, they might have a high growth rate. With Microsoft, that is the case because they've been able to grow their dividend by at least 10% every single year. But there are exceptions. A company like AbbVie, they have a high dividend yield, which is in the 4 to 5%, and they even also have a high growth rate, which is also in the 10+%. So this is one thing that it will not deter me from investing in Microsoft, but it is something that I pay attention to. There is no hard and fast rule, meaning low dividend yield, high growth rate, or high dividend yield, low growth rate, which one is the best to buy. I always say just mix it up. Have both in your portfolio. And also looking at Microsoft stock chart, Microsoft is currently selling for over $210, and I did notice that there was, of course, a dip in March because of the pandemic situation that we're in. They've been able to recover nicely, and it looks like they've been pretty much trailing sideways for the last couple of months. Now, is Microsoft a buy? I'm gonna say yes, but not at a PE ratio of 33, almost 34. I like to see a PE ratio below 20, and that's what I'm waiting for. So I do have shares in Microsoft, shares that I bought a couple of years ago, and I haven't added any more shares of Microsoft to my portfolio. But if Microsoft is able to, but if the PE ratio of Microsoft can come down to 20 or less, I will definitely buy more shares in the Microsoft Corporation. Also, if you're an investor who likes to invest in tech companies, another one that you should take a look at, of course, is gonna be Apple. Apple has been in competition with Microsoft, of course, and throughout all those years, they've been innovating and coming out with new tech also. So Apple is also one of those companies that I will analyze in the future. But definitely let me know if you have any other companies that you would like me to analyze. And make sure that the company is a fun company because I don't like the boring ones. And I'll talk to you guys in the next one.